Everyone, and welcome to this week's edition for CMC Markets. I am Michelle Schneider, Mish, Chief Strategist of MarketGauge.com. Today is the conclusion of February 20th, so by the time you hear this, it will be the start of what many people are anticipating as a big day because we have NVIDIA earnings and also we will have the Fed minutes come out. So my job will be to try to prepare you with some kind of trading strategy with a few instruments. We'll cover the dollar yen, we'll cover gold, silver, the SPX, and that should really basically get you relatively prepared. So let's start with just the straight up dollar here. This is the dollar futures, and it's good to use even if you're going to be doing it against the yen or the euro against the dollar. Essentially what you can see right here in this particular instrument, and this is the cash market, is that it's holding the 200-day moving average, which is the green line. And so as such, we've had one correction basically right here with a stronger close, and every bit of activity that we've had since this big day has been inside this big candle, and even including the close of today, you can see is within the body of this candle. So what that tells me is that on the open of this day, which is at 104.02, and the close of this day, which is at 103.98, so between 103.98 and 104.02 is pivotal. And that's really very important because if we're above 104.02, then it would mean most likely we'll see some strength in the dollar, and below the 103.98, of course, then we can see some weakness. And the obvious area of weakness would be 103.50, which is the 200-day moving average, and the obvious area of strength would be the high from this day, which is 104.85. And I think that's probably going to be the best way to play it. Now, in terms of the momentum, to try to get any ideas, we have been above the Bollinger Band through all of this, and today we actually close right below it, which means we could be getting a mean reversion sell signal in the dollar. And so let's have a look at the dollar yen. Looking at the dollar yen, again, very much stuck within a trading range. Although this looks a little bit more positive, meaning more positive for the dollar, in that almost looks like a consolidation with a bit of a bull flag after this particular long wick that we have here and all the work that we've done inside. So I guess really suffice to say that if we break down under this level, which would be the close of this day, 148.93, then I would think that that would again favor what we said before, which is that the momentum might have shifted in the dollar and the dollar could weaken against the yen, in which case if that happens, we'd probably next be looking at this level here at around 147.70. On the flip side, if we can get back up above the close of this day, which was at 149.30, then I would say that that would favor the dollar. And of course, the most recent high that we have here is 149.68. And above that, we're looking into these levels right here, which would be up at around 150.15. Again, momentum not as bad as we saw just on the straight up dollar here. It is trading right on the Bollinger Band. So even though we've seen a declining momentum, we have not yet had a mean reversion, which is what's going to make these numbers so important tomorrow. If you just trade off those numbers, then you'll be able to see which direction the dollar is. Now let's move on actually to the gold. In the last video I did a couple of weeks ago, I covered silver, as the silver was really trying to make a move. And then as we started this week with a short week, of course, we can see that silver came off a little bit while gold went up. So we are looking at that potential silver gold ratio for the silver to come into favor for more of an inflationary environment, which of course would also impact the dollar. But for right now, we haven't seen any real signs of that as the gold outperformed. But once again, the gold is just in a range bound, right smack dab in the middle of the range. And what was so interesting is that even though intraday traded above the 50-day moving average, it could not close above it. So that tells me that if we're just looking for an area, what we really want to see now is this to clear over 2040. It says 2038, but 2040 would probably be the nice round number. So if it gets back above 2040, then we'll start looking at the areas where we've seen a lot of congestion, 2050, 2060, and it really isn't until we get through 2100 where this thing starts to move much, much higher. So remember, you're in this chop zone. On the flip side, through that 2038, 2040 level, obviously we have a bullish bias. If we break down or cannot get through that and we wind up failing what was the open of this level today, which is at 2027, then I think we have to start looking once again at a move probably down around 2015 and then maybe 2000, and maybe eventually we get back down to the 200-day moving average at 1980. But at this point, looking at momentum, we actually had a mean reversion that was positive, and there's no divergence between price and momentum because this is slightly under the 50 and this is slightly under the 50. So most likely we will see this price lead and then the momentum catch up. So keep an eye on that area 2038, 2040. And I want to take a quick look at the silver futures because we had an inside day. After last week, it cleared the 50, got right up to the 200 and stopped. Today it came off, but not so significantly because all it did was digest Friday's move. Now, of course, as we know, it closed red. Also, no divergence. Momentum, you can see, is slightly below the 50. Price is a little bit higher than the 50. But I think in this case, the momentum has kind of showed us it flattened out right here. So that's why we don't believe that this will break $22. If it does, obviously the whole narrative changes. So assuming now, coming into tomorrow with an inside day, what we need is to break out over the outside day high, which is 23.56. We get through 23.56, I think you'll see buyers coming into this market. And the next place, of course, we'd have to look at would be 24, where we start to see a little bit resistance. And then, of course, all the way up, resistance up to about 24.80 before things get real interesting. And of course, on the flip side, if we break down under the big day's low, which was 22.84, then of course we'll be taking a look back at around the 22.35 level, and then of course that 22 level. So this is not only going to be important in of itself, but what it does in relation to gold is something that we're really keeping an eye on. Now with SPX, this was a classic reversal candle in that it made a new high, in fact a new all-time high, with that high that day of 5,048.39. But with this gap lower, generally that reversal holds until you take that out. So just stepping back a little bit, it has to get through that 5,048.39. And you know there were calls now for 5,200, 5,400, 5,600. It really needs to get through this before we can even start to think like that. In the meanwhile, if this is going to have a further correction, especially if NVIDIA doesn't deliver, people are really counting on that stock, then we're going to have to be looking at this from a 10% correction, which could mean, up to a 500-point correction. A lot of people are looking for that. So what would that put us? That would put us somewhere around that 4,600, 4,500. Now you can have anywhere from a 5 to 10% correction, but this would probably be the max. Now, of course, that doesn't mean that we couldn't get down to the 4,800 level, the 50-day moving average, and get a bounce. But overall, right now, what we have to say is inherent weakness based on this reversal, although the overall trend is still higher. So as coming into tomorrow, again, looking very carefully at what happens with NVIDIA, under 4,935, and of course the Fed, then I would say that we're going to continue this correction, whether it stops at 5% or 10%, that's a normal correction. That remains to be seen, but under 49.35, I would think that. And on the flip side, of course, we could still see somewhat of a bounce if we get back over today's high, which of course, looking at that, was 4,993. So above that, obviously 5,000 will be now a psychological pivotal level. But we could go up. We could even go up as far as where this opened, which is at 5,031, and then fail, because like I said, remember, it really has to clear this 5,048.39 in order for this to negate a topping pattern. And let's end with a look at NVIDIA, because this, of course, has been the most powerful engine with calls for a move up to 1,050, calls for move up to 1,200. Really, we don't pay much attention to those calls. Really, the price is going to be the most influential factor. This did not have a reversal pattern because even though it made a new all-time high on this day at $746.11, the next day it did not close below that. So that's really the other feature, is a new high or a new 60-plus day high with a close below the low of the day before. That didn't happen. So all we could say right now is this is just correcting, which after all, ahead of earnings and a lot of longs, it doesn't sound too crazy. So I would say 720 probably be somewhat pivotal. If we get through there, this may make a run for it ahead of earnings. Remember that high, as I mentioned to you, at 7,046. Under 720, I think we could see a little bit more pressure in this market. And of course, we had this gap was filled, but we had this nice little gap up here. So really what comes the major support to me would be the low of this day at 636, and just to show you what that looks like. At 636 now, not only do we correct to where this really broke out and gap from, but you can see all the consolidation it had before it took its last $100 move. So that's what I'd be looking under 720, particularly if we get under 690 and 685. Look for that move up to around that 635 level, 638, somewhere in there. And then, of course, if you're already long from much lower levels, you may want to hold into earnings. But I certainly would say that this could be extremely volatile. You may want to give it more time. Okay, that's it for now. Thanks so much for watching. Hope you have a great day. Speak to you real soon. Bye for now.